Here's what you need to know about the SEC filings for public companies and their stakeholders. These forms are required by the SEC so that investors can have all the information that they need to make a good investment. To find the reports for a company, go to sec.gov/edgar and search the name of your company. Select the one that you're looking for. Click on View Filings, and here you have a list of all of their forms chronologically. If you type in a form name in the filter, it will show you only that specific form. The 10K is what Warren Buffett reads for fun. The 10K is an annual report that provides a comprehensive analysis of the entire company's business, management, and financial condition. It's one of the more detailed reports, and it gives you a good insight into how the company functions. The 10Q is a shortened version of the 10K. It's released on a quarterly basis and focuses on the financial statements and operating performance of the previous quarter. The 8K is what companies use when major events happen between the 10K and the 10Q. For example, if a company is going through a bankruptcy or an acquisition, they have to file an 8K. The Def 14A or the Schedule 14A is the proxy statement. It's a document that's sent to shareholders before the annual meeting to outline what's going to be voted on. Shareholders can vote on executive nominations, on compensation, and on shareholder proposals to give a voice in how the company should be run. Forms 3, 4, and 5 are filed by insiders to disclose their ownership of the stock, and Form 13D is when an investor buys more than 5% of a company's stock. This is often the form that helps people find out when an activist investor takes a large stake in a company. The Form 13F is filed by institutional investors to disclose their holdings. You can easily track what large institutional investors that manage over $100 million are doing because they have to file one quarterly. And finally, the Form 144 is filed by an insider to sell the company's stock. Investors can watch for this form to make sure that insiders aren't suddenly selling off their massive stakes in the company.